So we are doing a sum of Feb March 2023 and it is paper 22. Okay, this is a sum of ratio question number 4. So we have Adya is a trader. She buys and sells one type of goods only. And she's given us some information for the year 31st October. And this is some information at the end of the year. The inventory quantity and valuation at 31 October 2022 are double at those at 31st October 2021.
Isn't this 13 months?
Sorry, see, this is our last day. This is our last day of the current year. Okay.
Okay.
And this is last day of the last year.
Oh, okay.
So in the closing inventory on 31st October 21 would become the opening inventory of our current year.
Yeah.
Okay. So they are saying that this inventory is double. If they're saying this inventory is double, that means this is twice.
So the inventory at 1st November will be 3,750.
Yeah, 7,500 by 2. So your opening inventory would become how much?
3750.
So your opening inventory will become 3750. With me?
Yes.
Okay, now they want you to complete the following table. They want
Yeah.
gross margin, profit margin, inventory turnover, asset test ratio. Okay, are you with me?
Yeah.
So I will
Yes.
find all that. Revenue is 98,000
Yeah.
minus cost of sales will give me gross profit.
Yes.
Cost of sales is what?
Opening inventory, purchases less closing inventory.
Opening inventory, add purchases minus the closing inventory. So what is opening inventory?
Opening.
3750.
Yeah.
Purchases is 62,305 minus the closing inventory is 7,500. So what will be your cost of sales? 58,555. Are you with me?
Plus 58555, right?
58,555.
Okay.
So this is 58,555. So your gross profit is how much?
98,000 minus the cost of sales. So 39445.
Gross profit margin is gross profit over sales into 100.
Yeah.
Gross profit is 39,445. Your sales is 98,000 into 100. So this will become how much? 40.25%.
Yes. 40 point.
Are you with me?
Yes.
Now what they want from you?
The profit margin.
How do you get the profit margin?
We need to get the net profit first.
Gross profit add other income minus other expenses will give you the profit.
Yeah.
Hmm?
So
So
we'll add other income and subtract other expenses.
your gross profit is 39,445. Add the other income. How much is other
Yeah.
income?
4630.
How much is expenses?
31,188.
What will be your profit?
Profit will be on
12,887. Yeah.
Yeah, miss.
So what will be the ratio?
It will be 12,887 divided by sales, which is 98,000 into 100.
Hmm. Percentage. What is the answer?
Yeah, miss, 1 second. 13.15.
Inventory turnover ratio. What is the formula for inventory turnover ratio?
Cost of sales divided by average inventory
Answer will be in times.
times, yeah.
Yeah.
Okay, yeah, miss.
What is your cost of sales? You had calculated above.
58,555.
Average inventory. What is your opening inventory?
Opening inventory is 3,750.
Closing
Then
inventory.
we add closing inventory and then divide by 2.
So this will become how much?
5,625.
So what is your inventory turnover ratio?
It is 10.409 times.
Sorry,
It is 10.4 times.
for what?
10.409.
10.409. So it will be
Yeah.
10.41 times.
Okay. Liquid asset test ratio. So current assets minus inventory divided by current liability.
Current assets. What are your current assets? You have two current assets.
Yeah, trade receivables and inventory.
If you remove inventory, the inventory will go.
What, miss?
Inventory will go away, right? First you add these two, then you minus in closing inventory. So this will go away.
Okay, yeah. So we're left with
Hmm.
9240
9240.
divided by the current liability.
What is your current liability?
Bank overdraft and trade payables.
Yeah.
So 9240 divided by 10,497.
Check the total.
10,497, right?
Hmm.
Yes, I'm getting
No, do the total. 5365 plus 5135. It's
yeah, I
10,500.
did. What?
The total of these two is 10,500.
10,500 kills.
So it will become 0.88 is to 1.
Yeah, 10,000.
Okay. Just try the next part. Okay, I'm just coming in a minute. Proceed to the next part. Read this, please.
Yes, miss.
Read this, yeah.
Adya's purchases price has remained constant throughout both years ended 31st October 2021 and 31st October 2022. The
Hmm.
following information relates to Adya's business for the year ended 31st October 2021.
Okay, fine.
Gross.
1 minute,
Yeah.
hang on. Just analyze it. What are they trying to tell you?
Miss, they said the purchase price has remained constant.
The purchase prices remain constant. So this is the information for your last year. Can you give me the information for the current year?
Yeah, miss. The current year, it is gross margin is 40.25%.
Hmm.
Profit margin is 13.15%.
Hmm.
Rate of inventory turnover is 10.41 times. And acid test ratio is 0.88 to 1.
Okay. Comment on the changes in the gross profit margin. The margin has increased.
Yeah.
Okay. So
So,
first the
say,
margin was less. Now the margin is more.
yeah, miss.
How?
The revenue increased.
See, listen to me. If my margin is 25%, my sales is 100, my cost of sales would become 75, my margin is 25. This is per
Yeah.
unit I'm talking. If my gross profit margin is 25%. If it is has to remain, if the purchase price is remaining same, okay, my gross profit margin 25% to maintain it. If I say my sales is 500, so 25
Yeah.
of 500 would become 125. Yeah,
Okay.
25% of 500 would become 125. So the cost of sales would become 375. Are you with me?
Yeah.
This is the
So,
of gross profit margin. That means it is gross profit as a percentage of sales. What do you mean by gross profit margin? It is
gross
gross
profit.
profit as a percentage of your sales.
Okay.
Okay. Now the margin has increased. What could be the reasons for this? The
The cost has
price has
decreased.
remained the same. The purchase price has remained the same.
Yeah.
The first thing you have to write for 2 marks. The first thing you write, comment on the changes. So first I will write that the gross margin has improved. That means gross profit as a percentage of your sales has improved. When can this happen? This can happen when your selling price has increased. Just let's check, do a check over here. If my selling price over here instead of 100, it is 150, purchase price is the same. So my gross profit would become how much?
It will become more.
It will
So,
become
75.
1. Okay. Now 75 over 150 into 100. So 50%. So the gross profit margin has increased because the selling price has increased. Okay.
Okay.
One reason why the gross profit margin increases. Selling price has increased and cost of sales has reduced. This is another reason why the gross profit improves. But here they are telling us that the purchases is the same. Are they telling us purchase price is the same?
Yeah.
Okay. So you cannot write this reason cost of sales has reduced. So you can say due to trade discount. Okay.
Yes.
You don't write this, just write cost of sales is reduced. These are the two reasons. Now you get 1 mark for this and you get 1 mark for this.
Okay.
Okay. Selling price can increase. That could be one reason, and trade discount can decrease. Are you with me?
Yeah, miss.
If you disallow the trade discount, your selling price will automatically increase. Are you with me?
Yeah.
Go to the next.
The liquid acid test ratio.
What does the liquid acid test ratio tell you?
The acids.
This is your liquid assets and this is your liquid liabilities. Here it tells you that your liquid assets can pay off your liquid liabilities immediately. It is
Yeah.
1.25 is to 1. So here it tells you that your liquid assets is able to pay your current liabilities.
Yeah.
Your liquid assets is 0.15 times more than your current liability. Okay.
Okay.
So it tells you that your liquid assets can pay your current liabilities very well. In which year? Last year. But let's talk about the current year. It is 0.88 is to 1,
So the first point we write is the liquid acid test ratio has decreased.
has worsened. It's become
Yeah.
worse. Okay. What will you
And
write?
decreased. Has worsened.
The liquid acid test ratio has worsened. What else will you write?
It is because the
One.
miss you're muted.
Is worsened. What is the meaning of this?
Uh, it could be because the current liability has increased or the current assets has decreased.
Okay, current assets is decreased. Okay. Do you know last year your inventory was how much?
Inventory 7,500.
Yeah, last year. No, this
Yeah.
is current year.
Current year
This
it
year,
is 3,750.
current year was 7,500 and opening inventory was half. Yeah,
Miss wasn't 7,500 the last year.
7,500 is for 31st October 2022. This is the
Oh
closing.
yeah. Okay.
So does that mean that you've purchased more inventory this time? Your closing inventory was 7,500. Your opening inventory was 3,750. So could this be one of the reason that more money is tied up in closing inventory?
Yeah.
So what could be the reasons? More funds tied up in inventory. What could be the reason for decrease in the liquid ratio? Current liability has increased.
Miss, what's the first point you wrote? More
More funds
funds
tied
tied
up
up.
in inventory. Current liabilities has increased, or you could say decrease in current assets.
Okay.
These are standard answers that you need to know. If the gross profit margin has increased, it is because of increase in selling price or reduce in the cost price. If the liquid test ratio has worsened because of increase in the current liabilities or decrease in the current assets.
Yes.
Okay, you can write this in your notes and learn it. Read
Yeah.
ahead.
Yeah. Adya is concerned about the increase in inventory over the year to 31st October 2022. She is considering reducing her selling price to increase the quantity of goods she can sell. Advise Adya whether she should reduce her selling price. Justify your answer.
If she reduces the selling price, you have to advise on reducing the selling price. So if
By
you're
reduce
reducing
the
the selling price, one minute,
yeah,
if she reduces the selling price, what will happen?
he'll earn a lower profit.
For first give me for, then give me against.
Okay. He'll gain more customers
Hmm?
and one more reason
More
could be
customers, that means more sales, right?
yeah, more sales.
Inventory will reduce. If she has more sales, her inventory will reduce, and her concern was to reduce the inventory level, right?
Yeah,
Okay. If inventory will reduce, inventory turnover will
ratio will improve.
now against wala.
The against points could be she might uh, gain very little profit,
Hmm?
a very low gross margin.
Sorry, very low gross margin.
Yeah,
Okay.
and she would require more things to sold in order to gain the same amount of
Customers
profit she
may
had.
not be customers may be unwilling to pay more amount in future.
Yeah,
What is your advice?
she she should not reduce the selling price.
Hmm?
She should not reduce the selling price.
Rather, she could do advertisements. Okay.
Yeah.
Whatever advice you give one suggestion along with it. Okay.
Okay.
List and try to answer yourself. I'm giving you 2 minutes of time.
Okay.
Come on, tell me. Read the question, please.
Yes. One of the limitations of financial statements is that there is a gap between the end of the financial year and the preparation of the financial statements.
What does this
It's,
mean?
so when the financial statements are prepared, right, there's one day it takes, so like, yeah.
You understand this one thing very clearly, okay? Your
What, miss?
financial year ends on say 31st of December. This is for an example if I'm telling. So when your financial year ends on that day, you don't have your income statement and your statement of financial position prepared for you. There is a gap between the end of the year and the day you prepare your financial statements. Okay. There maybe your year is ending on 31st December and it takes you like 31st of Jan when your income statement is prepared. Hello.
Okay, yeah.
Okay. Your year ends on another day. Your income statement is prepared on another day. So when she prepared her income statement, Adya, she came to know that she has huge closing inventory with her.
Yeah.
Okay. Now read the question.
Explain how this limitation may influence Adia's decision about whether or not to reduce her selling price.
Hmm? Yeah.
So, how does this influence the decision about the selling price?
Hmm. How will this influence her? Come on, tell me.
If there is too much inventory, she would have to sell
The
it cheaper.
issue is that there is a gap between the preparation of financial statement and the year end.
Yeah,
Okay, she comes to know about her inventory year, but the year has ended here.
yes.
So how does this gap influence her decision about whether she should reduce the selling price or no?
It may take her more time to identify what selling price she should set for the goods.
Hmm? So when
Like,
she has to take a decision about reducing the selling price, she needs to consider inventory at present date. She needs to consider inventory at present date. Her year is ending here. She comes to know about things over here. Now, if she has to reduce the selling price, she needs to see inventory here or she needs to see inventory here.
at the current,
At the current date, there might be chances that between this period she might have sold more without reducing the selling price.
yeah,
Could be chances, right? So if she has to take decision regarding changing the selling price, she needs to see her inventory at the current date and she needs to see profit made between these two dates. If she has not made too much of sales, then she will have to reduce the selling price. If she has made too much of sales in between this period, she does not need to change selling price. So she needs to
yeah.
see profit made since end of financial year. Okay. So with this we complete Feb March 2023 paper 22 question number 4. Are you with me?